What if I told you that one single line on your chart could reveal where the smart money is buying and selling? A line so powerful that professional and institutional traders base their entire day around it? Welcome back, traders. In today's video, we're diving deep into one of the most essential tools in a trader's toolkit, the volume-weighted average price, or VWAP. In this video, you're not just going to learn what the VWAP is. You're going to learn a complete actionable strategy to trade with it. We'll cover the theory, the setup, specific entry and exit rules, and most importantly, how to manage your risk. So, make sure you're subscribed with notifications on because this is a game changer. Let's get started. Part 1. What is the VWAP? The theory. First, let's demystify it. What exactly is the VWAP? The volume-weighted average price is exactly what it sounds like. It's the average price a stock has traded at throughout the day, but it's weighted by volume. Think of it this way. A simple moving average gives equal weight to every price point. The VWAP is smarter. It says, if a huge volume of shares traded at $150, that price is more important than a tiny volume trading at $151. How is it calculated? Don't worry, you don't need to do the math. Your charting software does it instantly. But understanding the formula helps you understand the why. VWAP equal to cumulative typical price into volume divided by cumulative volume. The typical price is just the average of the high, low, and close of each bar. So for every 5-minute candle, the VWAP calculates the typical price, multiplies it by the volume for that period, and adds it to a running total. The key takeaway. The VWAP represents the true average price for the trading day. It's the market's consensus of fair value for that session. This is why it's so important for institutions. If a mutual fund needs to buy 1 million shares of Apple, they don't just market buy it all at once. They use algorithms to try and get an average price below the VWAP. This tells their bosses they got a good deal for the day. For us retail traders, this gives us a huge clue about market sentiment. Part 2. How to set up your charts. Now let's get this on your charts. It's incredibly simple. I'm in TradingView, but this works on Thinkorswim, MT4, or any other serious platform. Open a chart for the asset you're trading. Let's use a stock like Tesla, TSLA, for this example. Make sure you're on an intraday time frame. The VWAP resets every day, so it's primarily a day trading tool. We use time frames like the 5-minute or 15-minute chart. In your indicators menu, search for VWAP and add it. Crucial setting. Make sure it's set to the session anchor. This means it will reset at the market open, 9:30 a.m. EST for US stocks. You'll see a line appear on your chart. Often, platforms will also show VWAP standard deviation bands. These are incredibly useful, and we'll talk about them in a bit. For now, just know that the main VWAP line is your primary focus. Part 3. The core VWAP trading strategy and rules. All right, this is the meat and potatoes. How do we actually trade this? The core philosophy is simple. Trade in the direction of the trend, using the VWAP as a dynamic support or resistance level. We break this down into 2 scenarios, the bullish bias and the bearish bias. Scenario 1, the bullish bias and long entries condition. The stock is trading above the VWAP for the majority of the session. This signals underlying strength. Entry signal, wait for a pullback to the VWAP line. Price should come down, touch or get very close to the VWAP, and then show signs of bouncing. Confirmation, don't just buy the touch, we need confirmation. Look for a bullish candlestick pattern at the VWAP. A hammer, a bullish engulfing, or simply a strong green candle that closes back above the VWAP. Stop loss. You place your stop loss just below the recent swing low that formed during the pullback or below the VWAP consolidation. This defines your risk. Scenario 2, the bearish bias and short entries. Entry signal, wait for a rally or a pull-up to the VWAP line. Confirmation, again, wait for confirmation. Look for a bearish reversal pattern at the VWAP. A shooting star, a bearish engulfing, or a strong red candle rejecting the level. Stop loss. Place your stop loss just above the recent swing high from the rally. Taking profit. A great feature of the VWAP is that it provides natural profit targets. First target, the previous swing high for longs or swing low for shorts. Second target, the VWAP standard deviation bands. The first band above VWAP is often resistance in an uptrend, and the first band below is often support in a downtrend. Trailing stop. As the trend continues, You can trail your stop loss behind the VWAP or behind recent swing lows, GU highs. Part 4. Advanced Tips and Common Pitfalls. Before you go live with this, you need to hear this. The VWAP is a tool, not a crystal ball. Advanced Tip 1. The VWAP Squeeze. When price coils tightly around the VWAP with low volume, it's often building energy for a big move. The first strong break away from the VWAP with expanding volume can be a powerful entry signal. Advanced Tip 2. The VWAP Slingshot. This is a favorite. A stock gaps up at the open, pulls back sharply to the VWAP, holds, and then rockets back in the direction of the gap. This is a high-probability continuation play. Common pitfalls to avoid. Trading against the VWAP. If price is consistently below the VWAP, don't try to be a hero and buy. You're fighting the institutional flow. Go with the trend. Chasing. Don't buy just because price is 2% above the VWAP in an uptrend. Be patient. Wait for the pullback. The VWAP will give you an entry if the trend is healthy. Ignoring the market context. If the overall market, like the SPY, is crashing, don't expect your stock to hold above its VWAP for long. Always trade in the direction of the larger trend. Using it on the wrong time frame. Remember, the VWAP resets daily. It's not as effective on weekly or monthly charts for day trading. Let's do a quick recap and look at a real example. Identify the bias. Is price above, bullish, or below, bearish, the VWAP? Get confirmation. Look for a reversal candlestick pattern. Enter with a stop loss. Define your risk immediately. Take profit at logical targets. See how patience and discipline pay off? We didn't predict the market. We simply reacted to the price action at a key level where the institutions were likely active. And there you have it, a complete guide to trading with the VWAP. You now have the knowledge to start using a truly professional-grade tool. But knowledge without practice is just theory. Your homework. Go to your trading platform, pull up some past daily charts, and practice identifying these setups. Mark where you would have entered, where your stop would be, and where you'd take profit. This strategy requires screen time and practice to master, but it will absolutely make you a more disciplined and effective trader. If this video added value and gave you a clear, actionable strategy, do me a huge favor. Smash that like button. Subscribe if you haven't already. Comment below with the #1 thing you learned from this video. I read every single comment. And let me know what trading strategy you want me to break down next. Thanks for watching. Trade smart, manage your risk, and I'll see you in the next video.